Not every brand is going to be right for retail.
How do they know what the different options are in retail and kind of where they sit within that?
What is their price point? What is their pack format? What your competitors are doing who are playing and succeeding at retail.
Most eCom founders dream of getting into retail, but very few understand how the game actually works.
Being realistic about your product. You need to be quite manicured in your approach and kind of understanding the white space. It might just have to go a little bit more niche and a little bit more specialized in their approach.
Today's guest is Connor McPherson, founder of Icon Outreach, the team that has opened 30,000 retail doors for over 40 brands, securing launches with the likes of Walmart, Target, Kroger's, Costco, and many, many more.
Having worked with close to 50 different brands over the past 18 months, we see time and time again that one, capital is a constraint, two, so is human resource.
He's helped modern D2C brands break into the biggest retailers on the planet and knows exactly what it takes to get your products on shelves and keep them there.
Major reset and the minor reset is where you need to kind of earn your place on shelf. And if you're not performing, there is a chance that you will get dropped in favor of another brand in the next reset.
And in today's episode, we unpack how to choose the right retailers for your brand and avoid the wrong ones.
Taking a look at what your competitors are doing who are playing and succeeding at retail.
The real economics of retail, from margins, pack formats, payment terms, and trade spend.
Fast-moving consumer goods are perfect for retail because you sell the product once. If they enjoy it, they'll come back again, and so you can build a sustainable business.
And how Connor's team builds retail roadmaps, contacts buyers, runs outreach, and secures meetings with category managers.
It needs to be custom for each of the retailers, speaking to different data points that they care about, get the outreach going, have the copy written, help with the follow-ups, and once we have a call in the calendar, we'll work with the team on their presentation or pitch deck.
So if you want to turn your D2C brand into a real retail powerhouse, this episode is for you.
Connor, welcome to the podcast.
Thank you, Jordan. Thanks for having me.
Well, look, for kind of background here, I guess where I want to start with is we work with a lot of D2C, online businesses, online brands, and it seems to me that they often kind of fall into retail by luck. There's no real kind of plan behind it, and I guess the whole purpose of what you do is to kind of simplify that message, make that simple for brands to kind of get into retail. Is that fair to say? And what would you say to kind of how you see brands trying to expand into retail?
Yeah, absolutely. I think a common misconception would be kind of treating D2C and retail as the same thing, like completely different beasts. And so they kind of need to be treated like they are. So while it's easy to kind of fall in, I think, as these opportunities arise, it's important to kind of build with intention. And yeah, absolutely kind of helping brands navigate that transition, as well as kind of understand the key roles that the retailers play and how that reflects to their product assortment is something that we help with.
Okay. And I guess my kind of first principle, or where I want to start with this is, like you said, it's a different model. Is every brand right for retail?
Not every brand is going to be right for retail. And I think it also depends on kind of, I guess, what you mean when you say retail, right? Like kind of Walmart is different to a Home Goods or different to a Best Buy. So I think kind of step one is being realistic about your product and potentially the impact it can have at a specific retailer. You need to be quite manicured in your approach and understanding the white space. We speak with many founders who they might have a $40 or $50 product and they'll be hoping to launch with Walmart. And it's not necessarily the right fit for their brand, but that's not to say that they can't play in retail in general. They might just have to go a little bit more niche and a little bit more specialized in their approach.
Okay. So what should brands be kind of thinking about then? So you touched on price point, but how do they know what the different options are in retail and kind of where they sit within them?
Yeah, I think taking a look at what your competitors are doing who are playing and succeeding at retail. So what is their price point? What is their pack format? Whether it's a 130 serving bag online or, a 7-day serving bag in store. And that allows to, kind of lower the barrier to entry. I think you also need to be very conscious about your unit economics because obviously the pricing model is very different. At retail, you need to account for trade spend as well as retailer margin alongside your typical margin. So I think, being kind of conscious of the economic or commercial side of things, as well as what are your competitors doing? And, there's typically rhyme and reason to that. So, when you are first jumping in, it makes sense to kind of, pay attention and not necessarily copy them, but certainly draw inspiration.
Okay. And from a financial perspective, is there a certain kind of point that a business should be at before considering retail?
I don't think there's specific revenue numbers that would need to be hit, but they certainly need to have the capital available to invest. So say you're looking to launch with a Walmart or a Target, they might place a six-figure purchase order and you need to have the capital available to fund and invest in that stock upfront. Payment terms can range from 30 to 90 days. So you have that capital tied up in that stock without receiving payment for sometimes a couple of months. So I think kind of being the cash position is probably the strongest indicator of the biggest consideration.
Okay, that makes sense. And I actually got this question from a kind of friend of mine that owns a supplement business. His question was, in terms of category choice, do you see retail working for kind of everyone, or there's certain categories where you would say, retail is definitely for you or maybe not for you?
Yeah, it's a good question. I think fast moving consumer goods or kind of goods that have repeat purchase built in are perfect for retail because, you sell the product once. If they enjoy it, they'll come back again. And so you can build a sustainable business. Obviously, if you're buying a washing machine or whatnot, that'll last you for quite some time. And obviously there's a place to play in retail for consumer electronics. But I think the perfect place to start if you are a D2C brand and are considering retail is, have a look at, is this a purchase or a product that consumers come back for?
In terms of the kind of benefits of retail, are we looking at the channel as kind of a profit driver, or is it about kind of brand awareness or maybe other things as well that kind of come from the channel?
Yeah, I think to begin with, for many brands, it is an awareness play. But I think like any arm or in a portion of a business, it needs to become a profit center over time in order to be sustainable. It depends, if you are just looking for a flashy launch to, gather some eyeballs, that's one thing. But if you are looking to kind of, build on this, expand across multiple different channels, maybe multiple different markets, it needs to be profitable. Because definitely, like I said, it's not the cheapest game to play. And there's certainly easier ways to make money.
Okay. And then, actually looking at the comparison of, retail versus online, you touched on it kind of being a different beast. Can you just talk to, aside from the kind of cash flow expenditure, upfront, that's obviously very different in retail, what else do you see different in the two channels?
Yeah, it's a good question. I think packaging or kind of how you show up on shelf is very, very different, right? Like a lot of eCom brands might be slightly more on the minimalist side of things and relying on landing pages and funnels to educate consumers. When you're on shelf, you have maybe 3 seconds, right? So you don't really get that dedicated attention you might online. Consumers are scanning the shelf, so your product needs to kind of stand out from a packaging point of view, and it also needs to be very, very clear about the value that you provide in terms of whether it's specific claims or use cases. If the consumer has to guess, they're going to put the product down and walk away. So you need to be very intentional about how you're showing up on shelf.
Okay. And are there certain brands that you think do that really well that you could talk to?
Yeah, definitely. I think there's a brand called Morning Made, founded by a good friend of mine, Brad, that have done really, really well at retail in the US. And kind of what they've done is come into the matcha category, which has typically been a little bit stodgy. I think the biggest competitor is white packaging with a cup of tea and some leaves on it. And they've kind of come in with this green color blocked packaging. It's very clear about the benefits that the matcha provides, as well as they're very clear about the flavor profiles. And so when you're walking down the aisle, they'll have multiple different facings. It'll just be green, green, green. And you get this almost extended, or it feels like extended shelf space that kind of draws the eyes in.
Okay. And then moving on to the kind of financial side of it, can you just talk to, what brands can expect, and I guess, from a kind of margin perspective, payment terms and kind of cash flow, what is typical?
Yeah, it's going to vary by category and by retailer. What I can say is wellness products typically play on the higher end of the spectrum. I've seen retailers ask for a 60-65% margin, but on the low end and something like a tea, it could be around that kind of 30 to 35% range. So it just is going to depend on the retailer, but as well as the category.
Okay. And then in terms of, payment terms, is there any way to, kind of, I think you said 120 days before, any way to kind of get that down or any kind of financing options available?
Yeah, so I think 120 days is on the extreme end. I'd say common would be 60, maybe 90. But in terms of the financing side of things, there are a couple of different companies available for inventory financing or kind of purchase order financing. Spring Cash is a new one. Lunar Capital's great, as well as Wayflyer. I think they're big in the e-com space, but are kind of moving into that wholesale support.
Okay, so they'll kind of give you the capital upfront
Yes.
to then go and purchase inventory. Is that?
Yeah. So slightly different models, I think, across the three of them. But I believe Lunar is they'll fund the inventory. Spring Cash will fund to the purchase order. So the I guess that includes your margins. It's bigger of a payment, I believe. And then Wayflyer sits in between. I think it's typically revenue-based financing, but it might be different on the wholesale side.
Okay. And then from a kind of team structure perspective, so let's say, there's an ecom brand that's, mid seven figures, selling online. They're a very lean team, people on the customer service side, maybe a product person, ads and creative. What would they need to add to that team structure when kind of, starting to introduce retail?
Yeah, it's a good question. I think I'm always an advocate for keeping things as lean for as long as possible. So leverage the team's, bandwidth as much as you can before bringing someone in-house. Over time, you will need someone on kind of the ops and supply chain side, someone who understands how to manage inventory. There, from time to time, there's different elements of compliance that are needed. And certainly as you scale, an account manager who can directly manage communications with the buyers, as well as kind of filter through the different reporting and analytics to kind of give the team a gauge of how well they're performing will be important. But I would advise, as you start to land your first couple of retailers, start with freelancers and consultants, and then scale those into full-time positions. One, when you have the capital, but two, when you have, some stronger signals from the retailers that you will be sticking around.
Okay. And is that, obviously the supply chain is crucial, but aside from that, is it the kind of account manager slot that's key in that team?
Yeah, I think it can be done by whether it's a founder or someone who works on the operations side, but it does become more demanding as you scale. And so managing the conversations with the buyer, speaking with them about where you can push harder, are there potential promotions that you can run, end caps or display units that you can purchase. And so making sure that, managing and owning that relationship and setting it up for success.
I'm not sure if this has kind of happened with any of the brands that you work with, but is there ever a case where, someone puts in that big, purchase order, get their product into retail and it just doesn't work? Is that a thing?
Yeah, it certainly happens from time to time. I think it's sometimes can be hard to, determine how well the product will perform at specific retailers once it hits shelf, but it happens from time to time. And what will happen in some cases is that the retailer will significantly discount the inventory to move it off the shelf, or sometimes they will, charge back or return the stock at the cost of the brand.
Okay. And how quickly would you kind of know if retail was working once you're on shelf?
I'd say you have a 6-month window. So, typically speaking, the sales will start on the slower end of things, but as you build brand awareness with the retailer-specific shoppers, as well as get a kind of couple of promotional runs under your belt, through that 6-month period, you'll have a decent understanding. The way that retailers work is, typically speaking, they'll have 2 range review cycles each year. So a major reset and a minor reset. And so that's typically spaced 6 months apart. And in between is where you'll kind of get that understanding or, risk. In between the major reset and the minor reset is where you need to kind of earn your place on shelf. And if you're not performing, there is a chance that you will get dropped in favor of another brand in the next reset.
Okay. So they'll give you kind of a heads up if they choose to go that route.
It's not always black and white, and they won't always say, hey, you're not going to make the cut for the next reset, but you will have access in some cases to kind of the sell-through data. And if you're not moving the expected or the anticipated units per store per week, the discussions need to be had with your buyer saying, hey, look, I know we're falling short. What can we do to pick things up? And try to keep the dialogue open and work alongside the buyer rather than kind of just sitting on your hands and waiting for that renewal email to come through.
Okay. And you mentioned the kind of data there. Is that something that, retailers are sharing quite openly? And if so, how often are they sharing it?
With many retailers, you actually have to purchase that data from them. But I know that if you choose to go that route, you can pull that on a weekly basis.
Okay, nice. And then I think my final question on this kind of topic is, when you're getting started, do you recommend, a slow start? Should people, brands just work with one retailer, or is it kind of a mass approach and, throw a load of stuff at the wall and see what sticks?
I think it depends on, one, the overarching strategy, and two, the risk appetite. I mean, some of the brands that we work with are like, hey, we'll take any doors, as many doors as fast as possible. Obviously, you need to have the funds to back that up as well as the inventory. Whereas other brands like to take a slower approach, roll things out a little bit more sustainably, and make sure that the kind of demand is there so they don't launch 1,000 stores and find out that it's going to fall flat.
Okay. And then coming on to kind of you guys, so you run eCom and you're helping brands get into retail. What does that process look like for you, and what does it look like without you?
Yeah, so I think where we really provide the most support is at the top of the sales funnel. So helping brands understand, like, one, which retailers are right for them and building out a bit of a retail roadmap. We'll then kind of sort through their pricing architecture, their pack formats, and understand, okay, cool, Walmart's the goal, but is that realistic? Provide a bit of pricing analysis and a competitor breakdown across their top channels of interest. From there, we've got an internal database of buyers and category managers' details. And then we'll scrape, the likes of LinkedIn to find, the most up-to-date buyers if they're still looking after the beauty category. And then we'll conduct outreach on our brand partners' behalf. Each retailer is looking for something different in the brands that they work with. So what Costco is looking for differs to Walmart, differs to Target. And so having worked with these retailers, we help identify these aspects within our partners' brands. And so we're tailoring the approach to each retailer based on their specific needs. And then once we kind of, get the outreach going, have the copy written, we help with the follow-ups, coordinate samples, send over brand decks. And once we have a call in the calendar, we'll work with the team on their presentation or pitch deck. As similar to the emails that we're sending, it needs to be custom for each of the retailers, speaking to different data points that they care about. And then we'll help with some of the commercial bits and pieces when it comes to what are the margin expectations, expected promotional depths and frequencies. And then typically help them through to the point where they're onboarding as a vendor. Without us, it depends on the structure of the brand. So if they're already have a retail team, it's typically something that they'll handle, but we provide a bit of extra resource and kind of help them reach more retailers. And then on the other side of that, if brands aren't familiar with retail at all, we, provide that strategic piece and kind of helping them understand the landscape and hopefully not make any mistakes.
Okay, I've got a bunch of follow-up questions for that, but the first one I want to start with is timeline. What does that process look like from, you starting work with someone and kind of getting them to that onboarding stage?
Yeah, so the quickest I've seen a retailer move from initial conversations to on shelf is about 7 or 8 months. I'd say on average it's 9 to 12, but it depends, when we kickstart the outreach and how that falls within their range review periods. Since a lot of the work that we do is on the upfront side of things with the initial strategy, with the initial outreach and kind of best positioning them for these conversations. Some of the brands we work with will get them up into the point where they're having the conversations with the buyer. They'll press pause and continue the conversations on their end. So not all of our engagements, sit for the 9 to the 12 months range, but I'd say that's, on average what you could expect if you are looking to launch at retail.
Okay. And when would you start having, positive signals within that kind of 9-month period?
I would say within the first 2 months is what you'd be looking for. Are the buyers responding? Are they asking for samples or requesting a presentation? How many meetings are you booking? But it's should be fairly quick. If all the answers coming back are no, either the positioning or the targeting is wrong, or perhaps there needs to be a little bit more work done on the brand itself before it's ready for retail at least.
And on the other side, so, from the buyer's perspective, what are they kind of looking at? What does good look like for them?
I think one of the biggest signals at the moment is social media presence, social media following. I've personally been speaking with a couple of buyers at Target over the past couple of months, and they're basically saying that's the biggest driver of discovery for their customers. And so having that, pre-built or baked into the brands that they bring on board is quite important, as that's what's going to kind of generate that brand interest, that brand awareness, and help consumers convert at shelf. So that's number one. I think the second point would be repeat purchase. So are consumers coming back once they've, sampled or tried out the product? And what does that look like from I guess, like a recurring point of view is that, what does the velocity look like? Are they coming back once a month? Are they coming back twice a month? And how many units are you shifting? Kind of per store per week is certainly an important metric as well.
Okay. And obviously there's, the financial motivation from the retailer of wanting to work with new brands. But from what kind of lens are they looking through this? Is it, we want someone with a strong following that can bring new customers to the store? Or is it, this product is going to complement and kind of, add to people's basket in store? Or what else are they looking for from the brands that they partner with?
Yeah, so I think, I guess driving basket growth is a great one, as well as kind of driving average basket value. So if you're kind of the category and maybe you are a couple of dollars more expensive, you're actually growing the category or the average spend as a whole, which can be an important consideration. I think they're also looking for products that aren't going to cannibalize sales. So, it's all well and good for you to come in and start, selling units upon units upon units. But if that's actually dragging down the rest of the category, that's not something that they're looking to do. And like you mentioned, it's always about introducing or driving new consumers into store, and I guess having them become regular shoppers.
Okay. And for you guys at Icon, is this just a US focus, or is this Europe, global? What does the geography look like?
Yeah, so we work across most of the English-speaking markets, so the US, UK, Australia, and New Zealand. And we also do a bit of support across Netherlands, Germany, Austria, Belgium.
Okay. And are you helping brands kind of expand maybe from the UK to the US, or is it mainly, local retailers that they're kind of pushing into?
Yeah, we do both sides. So whether it's a US brand looking to enter the UK, US looking to expand in the US, we work backwards and forth across all markets.
Okay. And is it, you've mentioned Target a few times, is it mainly the kind of big box guys, or is it also, outreach to smaller mum and pop kind of style retailers as well?
Yeah, typically we've been very mass retail focused. That's kind of my background. It's what I understand, but due to the long sales cycles, and it could be how difficult it can be to launch with some of these retailers. Recently, we have started to pick up the kind of mum and pop shop, kind of independent retail outreach, just because of how quickly they can move and make the decisions fast. Obviously, the average order value might be a couple of $100 here or $1,000 there, but in the meantime, it kind of allows some of the brands to recuperate investment and build a bit of cash up for when a Walmart comes knocking.
So you would say smaller brands should maybe start there and then like build up that war chest before kind of pushing on?
Yeah, I think that's certainly the safer route to go. And if you don't have experience in mass retail, working with different brands or retailers, it's certainly the quickest way to move, but also it's a little bit less risky.
Okay. And then going back to the kind of process that you talk to. So let's assume we've got some, positive signals back from a buyer at one of these bigger retailers. What does the conversation start to look like? What are people kind of asking for? And then, in that, I guess, sales call where you've got the kind of pitch deck, what's in there and what are you talking to?
I think at the moment, or what we're experiencing, is many of the buyers will request samples and a presentation before they look to jump on a call. So they can kind of feel the product in hand, take a look through the presentation before committing 30 to 60 minutes to a conversation. The conversations really exist for you to kind of, I guess, speak to the brand and the white space it can fill within that retailer's assortment. Where I see some brands go wrong is they'll spend the whole time talking about me, speak about their brand, how amazing they are. But I think it's important to consider the role that your brand will play within the retailer that you're pitching to. So what are some of their goals? And these can be found through, reading annual reports these retailers release, or just kind of taking a look at their category. Are they launching lots of new products? Is it skewing to a little bit of a younger demographic? These are all slight signals you can use to kind of cater or tailor your pitch to the retailer specifically.
Okay, so this isn't like a one size fits all approach. This is, a lot of work for each retailer that you're speaking to.
Yeah, definitely. I think especially on the larger side of things, you want to make that investment and spend that time because it is not necessarily that you only get one shot, but you might get one shot a year. And so you want to make sure that that counts and you do your homework and you kind of come in with a bit of credibility behind you as well. The retailers as a new brand need to trust that you can execute, you can deliver, and you can fund the relationship. So I think doing your homework, one, brings a bit of credibility with you, but two, kind of really highlights where you can play and the value you can provide beyond your product alone.
Okay. And are these kind of initial discussions, are these very binary of like, we're not interested, yes, we are interested, or is it more kind of, we would be interested if you could kind of fix this, please go away and do so?
Yes, I think if your product shows, if they see something in your product, they will leave the door open to workshop together, whether that's a pack format. Hey, we don't like the sachets, we prefer a pouch. Hey, your packaging or your claims aren't quite clear enough for us. Hey, we need a chocolate instead of a strawberry, or a strawberry instead of vanilla. So that's all something that we kind of try to put forward when speaking with the retailers is, hey, this is a partnership. We're not here to drop our goods on your desk and say, take it or leave it. That's where most brands succeed, is kind of, having, or I guess, being open to working with the retailer to fill the gaps within their category.
Okay. And once you've got through this kind of initial stage, is it then just up to a kind of negotiation on terms? And I guess kind of follow up to that is there any kind of wiggle room in terms, or is it, retailer says this, you must kind of match it?
Yeah, it's going to depend on the size of the retailer, but certainly on the larger end of the spectrum, if, when Walmart says jump, you kind of say how high, because they are the biggest retailer in the world. They are going to succeed with or without you. So, it's more important that you kind of, submit to their terms, I suppose. What I will say is everything is negotiable. I think you just don't want to push your luck too hard. And if you're looking to decrease the margin that they take, you need to invest in another area. So it's a lot of give and take, and it's not like you're getting straight discounts. It's saying maybe we don't want to run promotions every single week, but in turn we can, spend X amount on influencer marketing, driving consumers into your stores. So you can kind of make package and bundle deals, but yeah, again, that's going to depend on the retailer and certainly their size.
Okay. And are there certain terms in the contract that are maybe more negotiable than others?
I would say margin is typically pretty fixed. I would say that promotional periods are pretty fixed. These are typically drawn in line with the category averages. So if, and I guess these are drawn in line with the category averages, and there is, I guess, a method to the madness when these retailers are saying, hey, we need to promote twice a month at a 30% depth, because that's typically what's going to work and what's going to convert consumers. So I wouldn't push too hard on those aspects. But in other things like payment terms, you can offer slight discounts. Maybe if they pay within 30 days, you can offer them 2% back off the invoice. And I think it's harder when you're smaller, but as you grow, you can kind of negotiate shipping terms. So if that's FOB, X Works, delivered direct to store, that's certainly an element for negotiation as well. But again, you'll need to come to the table on something like margin if you are requiring the retailer to pick up the stock.
Okay. And once you've got the kind of green light and you're in, what's next?
In terms of the lead up to when you launch on shelf?
Yeah, so you've got kind of, agreement, you've agreed on the terms. How long do you have to kind of deliver product, and how does that kind of process go? Yeah,
so I typically say you'll have maybe 4 or 5 months to prepare the stock, prepare the packaging, make sure that everything's up to their standards. They're going to want to have the stock in their distribution centers at least a couple of weeks before launch, so they can distribute it to the stores that they have. And I think it's important to kind of continue to keep the buyer up to date, your contact with at the retailer on how things are progressing, but there's typically very fixed or very harsh in-store dates or in distribution center dates that need to be met.
And if you miss those, is it, goodbye kind of thing?
There'll be penalties for missing those. It's not goodbye, because you've set up with the platform and they've kind of, I guess, allocated shelf space to you. And so for them to delete you completely, they need someone to fill that shelf space. So there's a little bit of grace, but it won't be taken kindly.
Okay. And should you also be kind of providing updates on, how the business is going, new SKUs, this is trending on socials, or this is growing? Is that worth doing as well with the kind of buyers there?
Absolutely. Yeah, it helps to kind of keep them excited, keep them invested in the brand, and also show that you're growing beyond just on their shelves, which is an important metric as well. So whether it's monthly, whether it's every 2 months, just keeping them into loop and keeping an ongoing conversation there. I think it also helps to build that relationship, as opposed to, catching up every 6 months, whether you've performed on shelf or not. It gives you a couple of different touch points to continue conversations. And then they may see a specific new product that you've launched that they would like to bring in store. So it gives you opportunities to talk through expansion as well.
Okay, so almost like if you would send, an investor update once a month or once a quarter, you're almost saying do something similar for buyers at retail.
Yes, exactly that. And like, if nothing, it just shows one that you're growing, and two, helps to build that relationship, makes it less transactional.
And then once you're kind of, on shelf, I know you said there about the kind of data piece. Do you recommend that all brands should be, taking them up on that kind of offer and buying data and kind of seeing how they're doing, as soon as possible?
I think it can be hard for smaller brands because it is expensive. One thing you can kind of pay attention to is if they are placing repeat orders. That can be a good gauge on, is your stock selling through? And you'll know, say, hey, we had 100,000 units that we launched initially. Maybe it's 50,000 that they're placing a reorder for. And so you have a bit of a gauge that things must be going relatively well. But I wouldn't necessarily purchase data immediately until, I guess, you're in a little bit of better position to make that investment.
Okay. And is there anything you can do from the brand's perspective to kind of scale up? Like, once you're in a retailer, let's say they give you a certain number of doors, is there a way you can kind of push for more?
Yep, absolutely. So like a good way to push for more is to continue to, I guess, keep them up to date with new product development and also monitor your performance. So if you're performing well, they're likely to either allocate you more shelf space or increase your footprint from 5 to 6, 7, 800 doors. And then, allocate a little bit more shelf space in that respect too.
Okay. So how does the kind of expansion of shelf space work? Is that just, if you're selling well, you will get an expansion, or is there, is it available for purchase? How does that work?
Yeah, so that's typically reserved for brands that are performing well, because they're through giving you another facing, it's going to help you, increase velocity and move more units. Because if you're not selling, even if it was available to purchase, they're actually just taking room away from other brands that might be shifting product at a higher rate than you are. There's certainly alternate opportunities in terms of where your product can be placed. There's opportunities to kind of purchase end cap placement, which is on the end of the aisles, the first thing that the consumer sees as they walk down. There's also things like freestanding display units, which could be placed, whether it's next to checkout, whether it's, next to the shelf that you're on. So certainly are, I guess, additional shelving opportunities, but in terms of permanent fixtures, that's typically reserved for the brands that are performing.
Okay. And what is your recommendation on those kind of extras? Like, do you think at launch, are they a good idea, or what would you say to that?
Yeah, I think at launch it can be a great idea to at least pick up a couple of customers. So people are walking through and it'll just drive a little bit more trial in hopes that you will gain some repeat customers. I think end caps are a great way to do that. Not necessarily cheap, but also gives you an opportunity to potentially put some signage up next to your products as well, or potentially a shipping unit which they sit in, and it gives you a little bit more surface area to talk about the product or the specific claims. You need to make sure if you do get these end cap or display unit opportunities that you're using every piece of real estate that you have. So quite often when they have a display, you have the side, you've got the front, you've got the back that you can actually include copy on and different things about your brand. So it can be a good way to educate consumers as well as drive trial at launch.
Okay. And are you advising brands to view that as kind of an ROI purchase of, get the data, see if it works, test it, do more of it if it does work? Is that the kind of thought process?
Yeah, I think it is certainly a good indicator of the success that you might see, or when it kind of helps to shift the needle early and potentially pick up some repeat customers. Again, it is expensive. So for this is a smaller brand, it might not always be worth the ROI. But certainly it kind of gives you, I guess, additional opportunities to move units, which is always good, especially at launch.
Okay. But aside from that, are there any other ways that you recommend to brands to kind of push traffic in? I know you mentioned kind of influencer campaigns, but could they maybe run, a local Facebook ad lead gen campaign? Or is it very much just kind of get it to store and kind of leave it there?
No, I wouldn't get it to store and leave it there by any means. I'd continue to kind of reinvest. And what you said about kind of local Facebook marketing is the fantastic approach, right? You'll be directly calling out the stock's availability in the stores that are down the road from the consumers that you're looking to reach. So that's one fantastic way to do so. Another is, kind of running influencer campaigns where they go into store and pick the product up and basically speak directly to the brand's availability within that specific retailer. It's less so an influencer talking about the product, more so talking about the retailer and how you can find that brand there. And then I would also have a store locator on your website And depending on the retailer, maybe mention it in your Instagram bio or something like that. Anything that you can do to kind of draw additional eyeballs to the facts that you are carried at these specific retailers is only going to support your performance.
Okay. I want to kind of bring this conversation back to you guys at Icon. So like, I'm not kind of the retail expert here, but from what I understand, there's kind of, a lot of brands just do nothing. That's certainly an approach with kind of retail. There's the kind of broker model that I've, heard about before, and I've heard it's kind of like an old boys club. And then there's, your approach. How do those approaches differ, and why do you say that, brands should go with you?
Yeah, I think one of the benefits that we provide is complete transparency and visibility throughout the entire process. So with some brokers, you won't necessarily know who they're talking to and at what priority your category or your product sits within their catalog of brands that they're presenting to these retailers. So the approach we take is all of the outreach we conduct and the conversations we start actually come from a branded domain. So it's not an Icon outreach domain we're reaching out from. It's the brand itself, which gives them ownership into the relationship and helps them form that direct connection. Like we discussed about additional, flavors or pack formats or partnership opportunities. These are often best bred when you're speaking to the buyer directly and you're building that relationship over the course of a couple of different meetings or a couple of different over the course of a couple of months. So that's kind of the benefit that we provide, is allowing them to build and foster a relationship as opposed to working through a third party where they don't know the buyer's name, they don't know the specifics or the margin expectations on the category side of things. They just kind of get told yes, no, maybe. This is kind of what you need to do. So it's definitely more of a collaborative and a transparent approach.
Okay. And aside from, obviously helping out with kind of pitch materials and company info to assist you guys, is there anything you would recommend brands be doing to kind of, assist with your process? And here I'm thinking things like, found a personal brand. And maybe on LinkedIn, I've heard is what you should be doing. What would you say to that?
Absolutely. Yeah. So I think having a presence on LinkedIn, not just from the founder, but from the employees within the brand as well, is becoming increasingly important. And then I'll be, connecting with the buyers at your ideal retailers across LinkedIn as well, just so there's increased likelihood that they will see your content that you are posting. I would make sure that you're continuing to post on Instagram, potentially run some, local or geo-targeted ads, and then, also continue to kind of email them, right? So there's a couple of different, you're omnipresent, if you will, across multiple different platforms. It makes the buyer makes it harder for the buyer to ignore you. The other thing that works quite well, or we always recommend, is don't be afraid to follow up. Like these buyers at these retailers, in some cases, will receive 1,000 emails a day. That's one individual person, one buyer is receiving 1,000 emails a day. And so you're actually not going to bother them if you do follow them up every week or every couple of weeks. It is hard to piss them off. Obviously, treat them with respect, treat them like humans, continue to kind of, build on the brand narrative. Don't send the same email every single time. But if you can kind of continue to follow them up, don't be scared to send over NPD, marketing updates, or even PR features, things you might not think are relative. It kind of helps to build the brand narrative and the story that you're presenting these retailers. So certainly I think, social media presence is a great way to go, but also, don't be scared to kind of poke the bear and chase them a little bit.
Okay. And in terms of kind of benefits of being in retail, we've talked before about the, kind of brand positioning or value. Obviously, you're in front of more eyeballs. I've also heard that, it increases exit value. If you're, obviously multi-channel, there's less risk on any one channel. Would you say there's kind of any other benefits to retail that we haven't talked about in this episode?
I think you've touched on most of them there. Certainly, it's a great way to meet a new consumer. So it might not necessarily be someone in your ICP. It might not be someone that you've targeted before, but just through exposure and through, repeatedly seeing your product on shelf, you might pick up a new demographic that you hadn't been focusing on. So certainly a great way to kind of increase that footprint.
Okay. And then before we round things off, I know you've actually recently launched a new venture, Plus 40. Can you just talk a little bit about that?
Absolutely. So I think we've kind of touched on, right, running a consumer brand is incredibly capital intensive. It's very demanding. And, having worked with close to 50 different brands over the past 18 months, we see time and time again that one, capital is a constraint, and two, so is human resource. So we founded Plus 40 as an offshore hiring agency to kind of help fill this gap. placing kind of eCom and CPG trained offshore employees within teams to help with things like email marketing, media buying, executive assistants, Amazon support, whatever it might be. We've kind of, just, I guess, helping provide a cost-effective way to scale for some of these founders.
Okay. And for brands that are interested in that, what's the next step? Like, how do they know kind of which positions they need to fill? Or how do you kind of assess that when looking at new businesses?
Yeah, I think a lot of it starts with just a conversation. If they're, a lot of the time the founders will know they need help. They're working the 10, 12-hour days, they're burning themselves out. And so a lot of it will just start with a conversation with myself or my co-founder on, hey, what are the areas that you find yourself spending the most time on? What don't you enjoy doing? And where do you think the business could potentially see more growth? And then we have a number of recommendations that we can make that might help with those needs.
Okay. And you touched on, a few of the different categories there that you help with. What's the most common one to start with?
To start with, I think executive assistants we've been seeing quite a bit of demand for. So helping the founders with everything from email triage, inbox management, all the way up to kind of booking travel, supporting with trade show setup, managing conversations with different suppliers and vendors. We also see a lot of interest across marketing and operations roles too. So everything from the higher or the more, I guess, technical end of the spectrum with media buyers, all the way down to kind of community managers, people who help with customer service and things like that.
Okay, nice. Well, look, Connor, thank you so much for coming on today. I have learned a ton. For brands that are, interested in working with you, where can they find out more, or where can they start that process of working together?
Yeah, so we've got can find us on iconoutreach.com or plus40.co. Also posting a bunch on LinkedIn. So Connor McPherson on LinkedIn is probably the best way to kickstart conversations.
Perfect. Well, Connor, like I said, thank you so much for joining me today.
Yeah, likewise. Appreciate the invite, Jordan.